Good morning, good afternoon, good evening, no matter where you are in the world. This is Howie, and I'm here to help you win with money. Today is Monday, August 16, 2021. It is the start of week number 32. Week number 33. I am doing this video to summarize the results of trading week number 32, which is last week. Been busy this weekend, had a lot of stuff going on, so I'm going to do a video with my ETRADE transaction on options and dividends only to see how I did. So let's talk about crypto. Crypto has been great. It's been, after that quick all-time high, it went down and it dropped nearly 50%. I think Bitcoin went down to as low as 28,000. And I think Ether may have touched 1800, and everything is moving back up, so it's looking really good. And again, I'm just excited. I'm just basically dollar cost averaging, very small amounts. I'm not doing a lot. Sometimes it's $20, sometimes $50, but it's small amounts, and I'm just buying it consistently every month. So let's get to the options transactions. First thing I do is go to ETRADE, just copy all the transactions, and then I'm going to paste it into my spreadsheet. I'm going to leave a little bit gap, paste it there. Let's get more transactions. Okay, and then I think I sorted everything. I've been using the sort method, so I just have to do one giant copy now instead of piecemealing it. That's what I was doing last time. So let me copy that. Scroll to the bottom here and then paste over here. And then now I'm just going to merge it into one with all the dates sorted correctly. I spent a couple minutes cleaning it up. Maybe it takes me 15 or 20 minutes to clean it up. I basically delete all the unwanted rows. I plug in all the descriptions with the notes, and I explain each trade, and then I do number them, and then I also figure out how many days to expiration so that each one is very detailed. So I have a way to research my trading history, and I can see what my true rate of return is or what trades were bad. So I already saved this. So the first thing I'm going to do is just go to the top. I go to the side here. I always do this pivot. Hit the refresh. And normally when there's enough data here, I remove the previous month. It doesn't make sense for me to see last month's data. So I'm just going to remove that. And then this way it's a lot easier to see. You can just see the data. And this way I can research it to see if anything is wrong. I can just do this. I can look at it and say, okay, I know how much money I made last week. And then I have another pivot table where I double check all my numbers. I'll hit the refresh over here. And I'm just going to double check dividends, and I'm going to double check some other stuff. And everything looks okay to me. I don't see any errors. I'm just going to clean it up one little bit, bring the data back in. And now I just have to double check all these numbers here. I pasted in from the other slide. So this looks pretty good. 25 trades this week. Week number 32 is finalized. 873 trades based on this projection. At this rate, based on the latest data, I'm going to fall short on my goal for this year. I'm probably going to hit about 1,400 trades. That's what it's telling me. If I stop today, you can see it goes lower and lower and lower, and it will tell you where the projection goes. It's closer to 1,000. So this is the way it works. Hey, let's talk about some specific trades that I did. So last week I only did one trade on Fastly. It was my cash secure put, and I rolled it down. You see I didn't make a lot. I made a whopping $16. But if you add it up from the previous week, so 2 weeks ago, I have two cover calls and one cash secure put. So that you can see is $293. And then if you add one more week, I'm up to $357. The fourth week, $376. And in the fifth week, it's $333. So you can see that in Fastly is really not bad. I'm going to play both sides of it. So I'm going to do cash secure puts right now using a lower boundary, and then the cover call is obviously above the market price, and I'm going to hopefully keep it that way. The only time that's not going to work is if Fastly moves sharply up or down, which happened last week during its earnings. It fell sharply down. I don't remember exactly how much. It was $6 or $7 down, and then the next 2 days it basically recovered most of the games. So I'm going to try to keep on playing both sides of it. On the cover call, I'm going to try to keep on rolling up. On the cash circle put, I'm going to keep on rolling down, which means eventually I'm going to make less and less premium on both sides, and then I'm going to let the cash circle put most likely expire. The whole idea was I only want to add more shares. It was under 40 bucks, maybe 35, I think is how I started. But I don't know if I really want to add more risk. I already have 200 shares. I don't really need more. The whole concept was I was just trying to make some more premiums. The next one is Energy Transfer. It's only a $10 stock. And all I had to do was, Energy Transfer was around $11 a couple weeks ago. It's actually back down to like mid-9s. So what I ended up doing was, this contract was basically losing most of its value. So what I did was I shortened it up by rolling it down in time. But I also have to lower the strike price $1. But I did collect a premium for that, and it's not a lot. These are $4 premium. So the purpose of doing these things are so when you shorten it up, it just means I have, eventually you're going to do another trade because you're bringing it closer in time. It's going to expire sooner, and then you do another trade. So what you're hoping for is the sum of those two or three trades are cheaper or more than the $16 that I just made. So that's the concept there. Otherwise, you let it expire and then you just wait until October to do whatever move you want to do next. So that's sort of the concept of rolling out first. Sometimes when things are moving up, you roll it out in time. You roll it up in price. When markets adjust, you sort of roll it down closer to the market price and closer to the sort of the time frame. I shorten it up. So that's what I'm playing it for. You're not going to make a lot of money on a $10 stock with, again, this is in the utility industry, so you're not going to make a lot. Again, but these are good, consistent, stable trades where in the last 7 weeks, you make 50 bucks. Let's talk about EA, Electronic Arts. You see, I also rolled this up and out. I collected another 130 bucks, and I moved it up $7 in strike. But what's interesting is, if you look back another week, EA, I had a cover call for 150, and I actually rolled it down and in for premium. And you see, I still got a positive 19 or 18 bucks, 19 bucks there. And what happened was when the shares started dropping, I wanted to move this. Again, I shortened it up, and then this gives me an ability to roll it back out. Now, it looks like it's kind of counterintuitive, but it's not. If you look at the sum of the two, you're still making money, 153 bucks. If you add another week to it, 277. Or not another week, but that's like 5 weeks now, right? You're in this play for 5 or 6 weeks. And if you go back here, there wasn't a lot of play prior to that, but if you scroll up to week 19, I collected a total now, right? Week 19, I only collected 218 to move it from a June to a September, and I moved it up $5. So I collected a premium to get ahead of it, and I've been doing that since May. If you look back here, when I had a 136, remember, I never got my shares assigned or never got taken away from me. I collected $600 in premium. I still own the shares. And prior, I don't remember exactly what the price was in May, but I think it was under 136. So I made money because it actually went up to like 140. I don't remember exactly what that recent highs were. But this is how you can make money on the premiums, by rolling up and down. And again, some stocks are better than others. Some stocks you can't really do this. Some stocks, when you're rolling it, it will cost you money. So I like to roll up and down on stocks where I can most likely collect premiums when I roll back down. So in the next trade, I want to talk through this specific iron condor. You can see on the 13, I closed it and it cost me $300 to close. And you're saying, well, how did I make money on this? So you got to go back to the very beginning of this one. So in the beginning, I opened this new iron condor with 45 days out. You see it on week number 28. And you see all the specific data here. And here's how much it cost me. Which means I collected $506 to open this particular trade. And then it cost me $300 to close. Now, if you only looked at that, it implied that I made 200 bucks. But what you can see is every week I'm actually narrowing down my iron condor. And not every week. You can see this is week 28, week number 30. I narrowed it down by rolling the untested side, which is the put. And if you see this, I collected $81 to do that. That's after commissions. I collected $81. Then what I end up doing is the next week, I actually did both sides. I rolled both the tested side, which is the call, and the untested side, which is the put. And if you look at that transaction, that looks like this here. And I collected $93 to do that. And then come this week or last week when I did this trade, you see I did it one more time. I did it with 16 days to expiration. I actually rolled for a small premium, which is $36 here. And then I rolled the tested side for a little bit more premium, which I got $98 here. So when you add this all up, and we'll do it like this using a spreadsheet, in total I made $476. Okay, $476. So I want you to see this, $476. But my maximum when I started this trade was $506. So if you look at the math, $506 was the max gain you can get, the max profit, if you let it to full expiration without doing anything. I got $476 because I've been rolling, making the iron condor a little bit more narrow. It's almost like converting it closer to an iron fly. But I don't ever get to the point where the short call and the short put are the same price. So I'm just narrowing it down. And when you do that concept, what you're saying then is, if you looked at maximum profit, I reaped 94% of the max profit by doing it this way. Yet I still have 14 days left. So I'm trying to remove some of the gamma risk by only moving untested side, unless I'm sure I can make money. And that's why with these, I only did it with 1 or 2 days of risk. Because if you rolled it to make it more narrow on 16 days and 15 days, but I closed it 2 days later or 1 day later, so you can see I only left myself 1 or 2 days of let's say, gamma risk, right? Where if the market moved, let's say 5%, I can get burned. But it was a risk I was willing to take because I've been doing this quite a bit. I do a lot of these trades where you start very conservative, very safe deltas. A lot of people trade with, let's say, 5 deltas or 10 deltas. So they're very safe trades. And as time goes on, you can see how your options become worthless pretty quick. So the only way to sort of prolong that type of trade is to make it a little bit closer to the market price. So I only generally move it $5 closer or maybe $10 closer, depending on how wide you start it with. So you collect a little premium, and it's not a lot. If you're making an extra 4 or 5 cents per contract, that's all you really need, because you see I'm doing it sometimes twice in the life cycle of one iron condor. Let me try to find another example. This one had a 5 contract, and you can see how the numbers played out. I'm going to try to find another example. Okay, I found another one, August 27, 12 contracts of SPY. Let me show you how this one worked. If you do this, what does it say? It cost me $700 to close. Okay, $700 to close. And if you just look at that, it's so easy to think that you lost money. So let's just write that down. It cost me well, let's not write it down. So let's track this trade to the beginning. Here you go. This is the original contract with 12 contracts, same SPY. Here's the cost. I collected $1,552 up front. So let's do $1,552 up front. And then I close it for $703. So it makes it look like I made $800 on this one. But let's find out what really happened. If you scroll this all the way up, it says I collected $1,248. $1,248. So I made 80% of the max profit. And this number is clearly much higher than the $700 it cost me to close. And what people have a hard time is when they look at how much money it costs to close, they don't understand how you make money in this. So if you collected $1,005 up front, Then the next week, I rolled the untested side. So now I'm up to 1,600 collected. Then the next week, I rolled it the untested side again, and I'm up to 1,700. Then last week, I did it twice, and I collected a total of 1,900 up front. And so this is an open iron condor, which I still need to close. So I finally closed it with 15 days left. So again, I collected $1,952. Even if it cost me $700 to close, when you add that in, it shows you how much money I made. I made $1,248 on this particular trade, where my max risk or my max profit was only $1,552. I closed it with 15 days left, reaped 80% of the profit. Again, I am subjecting myself to some extra risk here on day 17 and 16. I did roll the put. On this one, I didn't roll the tested side. You notice that? This one, I only rolled the puts, which makes sense over here. I did not roll the call side, which was a 455 here. On the other one that you saw, I did roll the call side closer to collect some premium. But on this one, market's looking really good. You know, I think it hit 446 was the high for the SPY, and I wasn't willing to take that risk by rolling the call side down. So on this one, I clearly only played the untested side, and you see it worked really well. I did make 80% of my max, $1,248, which is relatively, I put up $12,000 and I made roughly 10%. And if you track the number of weeks, if I close it in week 32 and I open it on week 28, it's a 4-week play. So in 4 weeks, I made 10% of my capital. If you can duplicate this strategy, and I know it's impossible to duplicate this every month, but if you did, that puts you up to 120% rate of return for the same 12,000. Now, you got to factor in times where you're not going to make the same percentages. Then you got to factor in times where every trade you're not going to make money. So if you use this concept of, well, if there's 10 months in a year, and we know there isn't, there's 12, but if, right, I'm just trying to make the number simple, but if you do this trade 10 times a year, and let's say you lose on 3 of them, and then 7 times you can make money, the key is you got to manage the times when it goes against you. You got to know how to roll it, you got to know how to close it, readjust it, start it all over again. The problem when it doesn't work is when you go and blow through your max loss. A lot of times you got to learn how to close these things before your max loss. And you'll see it's very, the method works. It gives you a lot of time to adjust. So every week I'm adjusting it. That's what rolling is here. When I'm rolling these untested side, I'm not changing the dates. I'm just rolling it closer. But I have plenty of time to adjust these trades. These are not 7-day DTEs. These are not 1-day trades or 2-day trades. I'm playing a 45-day to expiration. I could have closed it right around here when I made money, but I wanted to squeeze out a little bit more, and that's what I end up doing. So I like these strategies. You can put on a trade, let time decay, shoot for the 50% target of your max profit to exit out. I like these because when market's against you, you don't have to wait for the 50% target of your max profit, right? If your max profit on this one was 750, that's what people shoot for. But if markets are turning against you, even if you made 20 or 30% of your max profit, right, $200-300, you could exit out of the trade and start by repositioning a new trade. And this is why I like these strategies. They're a little bit easier. You don't have to know anything. You don't have to know how to chart. You don't have to read trends or resistance levels or oversold or overbought. You don't need any of that. I just follow a very simple method. Again, you can put it on. You don't have to watch it every hour, every minute. I do log in because I'm doing these type of trades. I'm trying to get into a much simpler system. Sometimes I only roll on like Tuesday, Wednesday, and Thursdays. And then on, generally speaking, I like to close on a Friday. And sometimes I like to open on a Tuesday. So there are different things that I do, but I don't need to trade every day. It's not a daily thing that's needed. Hey guys, please comment below. Let me know if you understand this. If you need me to detail it even further, I can explain why I do this, how I'm doing it. But you can see I'm making money. The spreadsheets are pretty accurate. or very accurate. I copy every transaction from my broker. So these have commission already factored in. And then I add my notes. I add the method here. And then I add some other stuff for pivoting purposes. And then I add this in here. So I can track everything. And it's really easy. I can show the math. People love it when I teach them how to do this. I don't suggest you taking high risk by keep on rolling all the time when you don't know what you're doing or when you're beginning. I tell people, remember, if you can just trade and make a profit on every trade, you'll make money. Obviously, once you get better at it, you want to try to squeak out an extra 0.5% or percent to whatever method you're using. You fine tune your strategy. You squeak out a little bit more money per trade. And that's how you're going to make more efficient use of your capital. I don't need to chase 100% gainers. I don't need to go long and chase 5x or 10 extra money. I just don't need that. I can make a decent living. I can make a decent return by doing something with very little risk. Okay, I'm going to end this video. Hey, give me a thumbs up. Share this video with somebody you think may need this. Let's help the YouTube algorithm get this into other traders, as many hands as possible. By using this particular strategy, I haven't blown any accounts yet. And I know other traders have. And I think some of it is because they're using a much more riskier strategy where it's harder to maintain and manage. I'm using sort of the reverse strategy. Really boring, really easy to manage. You don't need to be an expert in anything. You take a profit whenever you feel comfortable. If you want to take additional risk, you can add that risk in. That's what I'm doing by rolling it and making my iron condor a little bit more narrow. A lot of my strategies are the same way. If I'm doing a cover call, I like playing a cash occur put on the same security with the same expiration on the other end, because you can't be wrong on both sides, and that's like a short strangle. And so I love doing strategies where you improve the odds. Even if you're wrong, you're only wrong on one side. The key is managing the risk. You don't ever want to go past the max loss or get close to the max loss is what I mean. And if you manage it well, right, over time, you're trying to play the odds where it says, hey, the premiums you're collecting will offset even the losses that you incur. And if your losses only happen 2 or 3 times out of the 10 trades, and again, you can't just look at 10 trades. You got to look at hundreds of trades, thousands of trades. And when you repeat this over and over, that's how you know whether or not your trading strategy is working. But I created a video for that. You should go and look at it. But anyway, hey, I got to run. Let's do this together. Let's do this $1 at a time. As always, have a profitable day. Bye-bye.